Welcome to the Beginner Investor Podcast. I'm your host, Luke Burke, and today I want to talk to you and teach you a little bit about what happens during earnings season. Let's get started. All right, so you've heard people use the term earnings season as it pertains to the stock market, and you have no idea what it is or what it even means. So what I'm going to try to do for you now is I'm going to try to give you an idea of what earnings season is. So earnings season is a few weeks throughout the year where companies will report their quarterly earnings. When they report their earnings, they're reporting kind of backwards because the quarter has already ended, but they're reporting on that previous quarter. So for example, if a company is reporting on quarter one, January, February, March 31st is going to be that last day of the quarter, and they'll probably report earnings somewhere around April, May, whenever the earnings season is set to kick off. So that's basically what they're doing. They're reporting their quarterly earnings. They file their Form 10-Q with the SEC, which is the quarterly report, not to be confused with the 10-K, which is the annual report. Okay. So why is anybody interested in these reports? Okay. So in these reports, the other thing that the companies will also do is they'll do what is called an earnings call, and they will report out verbally on what has happened with the company and what is happening with the company. A couple things that'll come out of these meetings and their reports. Maybe not so much the report, but out of these meetings, they do file. Here's a tip. If you invest in a company, you want to understand what they have going on. Most companies do have an investor relations website where they also report their a summary of their quarter on those sites after they produce their reports. Okay, after they publicly release their reports. So, for example, if you go to a company, you go to their investor relations, and you look, they'll likely have that report there, and probably have a link to the earnings call. And if you want to find an earnings call, you just Google it. Okay. So anyway, these companies will do their earnings calls, and they'll talk about the main thing that you will hear when it comes to the reports, because the financial news agencies will listen in and report these out publicly. So, you'll hear revenue, which is top line, and you'll hear earnings per share, which is bottom line. And the revenue is basically everything that the company has made in that quarter. And then the bottom line is your net income, divided by outstanding shares, which you'll get your earnings per share, your EPS, earnings per share. So how much are you earning per share? The only way to truly find that number is taking that net income and then dividing it by your outstanding shares, and then that's how you get your earnings per share. Okay. Now the earnings per share is going to look like a small number, but it's not compared to like the millions and stuff. You'll normally see earnings per share is $2, $5 here, maybe 20 cents here. So what happens with these numbers? The other element to these reports is the analyst estimates, right? So let me back up a little bit. When the companies report these, they're not reporting against another analyst's expectations. If anything, they'll say this is what we expected. Okay. So in this report, you'll find the revenue, earnings per share. You'll also now separately, Wall Street analysts will make predictions. Now, these analysts are experts in the field. They're experts in these companies, and they have studied these companies, and they'll do a really good job of estimating what these companies should be earning, or what they expect these companies to earn. What will happen when the company actually reports, people will compare it to the analyst. And if the company says, hey, we reporting 800 million, and the analyst said, well, we expected them to report 900 million. People are likely going to react, when it's not always a case that you need to react, because maybe 800 million is still good for that company's growth. It just didn't meet this analyst's expectation. Analysts are great and analysts are good, but sometimes you have to be able to sift through that noise, because every analyst is going to have a different opinion on where the company should be and where the company is actually going. So that's why it's important for you to actually understand for yourself as much as you can about where you believe a company is going and where you believe their growth and revenue should be. I'll give you an example. Let's just say you visit one of the companies that have a large theme park. Okay. And you've gone there, you go there all the time, you go there every year, and you notice that there's been a decline in participation. And then when you hear the numbers report, you're like, yeah, I'm not surprised because I've seen a decline in participation every time I've gone. That's kind of how you're going to have to look at this. You can't always go into the noise, right? You can't always listen to the noise. Okay. So we talked about the revenue. So these companies quarterly will report the revenue. They'll report their earnings per share. They'll kind of talk about the company, what's happening in the company, what's coming in the company. Another thing that they'll do, and I mentioned that their report will come out and people will compare it against what the analysts say. The next thing you'll want to be interested in is the company is going to forecast what they see coming in the future. So some of the companies will either downcast or they'll project down, and then some companies will project up. Some companies will say, hey, we expect a 35% growth year over year in the next quarter. Some companies might say, hey, we expect a pullback. Okay, we expect a pullback. We expect, for example, when the pandemic happened, when the companies are reporting, they're going to say, if you're an airline or if you're a theme park, you're going to say, hey, we don't expect as much revenue this quarter because people aren't traveling as much. And since they're not traveling as much, we don't expect a lot of participation in our services that we provide to people. So they're going to say, well, we expect our earnings per share or our revenue to actually drop and go down. This is not always a bad thing. Sometimes it's just the economic climate. Sometimes it's just what's happening in the economy. Okay. So don't get so caught up in the noise. Just understand what it is that you want and what you need. Okay. So we talked about the revenue, EPS. We talked about the company giving you kind of an overview. We talked about the report versus the analyst and, their forward projection. That's what you're going to be watching for when we do earnings. So to answer the question quite simply, what is earnings? Earnings is the report that companies provide to the SEC on a 10Q form, or in a 10Q form, which is annotating Q quarterly, their report. And in this form, you can find all the data that they're already going to report in. And the report you'll find on the investor relations website is probably a summarization. Now, to go back to the expectation thing, companies do sometimes have certain expectations for themselves, and they will sometimes talk about those expectations in their conference call. But when you hear the conference calls, there's not going to be a reference to these analysts, that analyst. Now, the analysts are often in the rooms asking questions. Don't get me wrong on that. The analysts are there. They're listening in. But the company is not hyper-focused on comparing their numbers to analyst numbers. And there's a lot of other CEOs that you'll see on TV, and they'll just say, hey, you know what? We're not about trying to meet metrics for the stock market. We're out here trying to provide the best service or the best products that we can for our customers, for our consumers. Okay. So that's kind of what you got to understand about earnings. So earnings season is great. It normally kicks off with the banking. Like I know, October 14th, kicking this thing off, we have JP Morgan, we have Goldman Sachs, we have Wells Fargo, we have Citi. That's just the names of banks. We also have Johnson & Johnson, Domino's Pizza. We have quite a few companies that are going to start off this report on Tuesday, the 14th. Now, one thing that I do want to say is that you have to understand some of these companies are going to report in the morning, and some of the companies are going to report after hours. So some are going to report before the market opens. You'll see it on whatever you track, market open, and you'll see it on the market close. So then they'll report 4 o'clock after. Normally, if they report around 7:30, they'll have the conference call around 8 or 8:30. If they report in the afternoon, around 4:30, usually around 4:15, 4:30, then they'll have the conference call likely around 5 o'clock. Not a set in stone, but that's how it happens. Now, one unique case that happens out here on the market, I have to go and do some more research on why this happens, but I know it happens, and I know there's a reason why it happens. I have an assumption on why it happens, but I don't want to draw any conclusions right now. Berkshire Hathaway actually reports on Saturday, which I think is quite interesting. I like it because it takes away some of the volatility during the week as the companies are reporting. However, people can still come in on Monday morning or Tuesday morning, whenever the market opens, and they can bring and increase that volatility. But at least if they report on Saturday, it gives that kind of day, that buffer for people to kind of take in the information, take in the data without the market being open, and then they can go from there. Okay. So what do you need to remember from this video? Companies are required to report quarterly. They'll report top and bottom line information, revenue and earnings per share. They'll also give you projections on what they expect coming in the future, maybe the next quarter. They report these 4 times a year because there's 4 quarters in a year. Usually they'll do an earnings call on top of that. And again, this is an exciting time for companies to announce how well they're doing or how they're not doing. One thing I left out. This is also an opportunity for us as investors to really get intimate and understand what's happening within the company, because we don't all have private insight to the companies. So this is our window into how well the company is doing. Now, you can always keep researching, keep watching, keep looking, keep listening. If you listen to the news channels enough, you listen to the finance channels enough, you'll kind of have a gauge for what is happening in the market. Now, one last thing, going back to the analysts, when they don't meet expectations, sometimes the stock market can react to that. Sometimes they'll go down extremely, or sometimes they'll go up. You have to try to avoid getting caught into that because sometimes it can be very risky. A lot of professionals that I've heard advise you not to buy stocks, definitely not options, before earnings. I've done it before. I know how bad it can be if you try to estimate if a stock is going to go up or down. A lot of times you'll be wrong. I had about a 50-50 on those. There are option strategies that you can use. I'll talk about it in another video. Actually, I've been talking about my options training that's coming up soon. But yeah, so that's what earnings season is. It's just a quarterly time where they provide a quarterly report to the SEC. How do you find these reports? You go to sec.gov. In the top right corner, there is a search box, and you search the company, you type in their symbol, and then right there, you'll see all the reports, your 10Qs, your 10Ks, your 8K, I believe, 13F filings for certain companies, 10Q, all these forms that are required are there. Okay. So there has been, one last thing I want to say, there has been the idea tossed around of reporting every 6 months. Right now, it's going to be quarterly. Right now, it's going to stay quarterly as far as I can tell. But there has been an idea tossed around about reporting every 6 months, which, I think it does make some sense, to take away some of the volatility in the market to allow companies time. But I also personally like the quarterly reports myself. So anyway, I hope you learned something here about earnings season. I hope that you get excited about earnings season and just pay attention. Watch CNBC, watch Bloomberg, watch some of these channels, listen to some of the podcasts, listen in on what's happening. I promise you it'll make you a better consumer. Thanks for watching.